Good morning, everybody. It's Chris here from Serene Education with your 4 majors analysis update for the 5th of July 2012. Hope you guys all had a fantastic, for all you Americans out there, I hope you had a fantastic 4th of July. Just getting on to what's most important is the analysis, the 4 majors this morning, and I'm going to be starting with the Euro against the US dollar on my 4-screen long-term template. I use this one primarily for my trading. I don't do as much of that close trading that Nikki does, my wife. I don't trade a lot of the 15-30 minute time frames. I particularly like the longer term stuff. And then it suits my nature. I'm more long term. Okay, so what's been happening and what can we expect today? Well, a lot of news out first thing and foremost today, Thursday and Friday. These 2 days are going to be very volatile. There's going to be a lot of movement. A lot of speculative trading, as we have very important news announcements today. We have, well, today, starting with this morning, today, we have the Spanish 10-year bond auction. That's going to be very, very important. We all know that Spain's going through a bit of turmoil, and to see what the Spanish 10-year bonds yield is going to be important to see how people are actually looking at the purchasing power or the actual background power of the Spanish economy. What else do we have? We have German factory order and orders. Not really all that important, but Germany being the largest production mart in the Euro or Eurozone, it'll be important to see how the German month-on-month figures go, factory orders go. Then we go into the most important part of the day. Is going to be the official bank rate for Great Britain. Great Britain at the moment now, I think the last 3 years has been sitting at 0.5%. IMF has been asking or mentioning that Great Britain needs to drop their interest rates to 0.25% to actually help the whole of Eurozone. It'll be interesting to see if Merv King does not take up that option for the second running month. IMF suggested this last month. We also have the minimum bid rate for Eurozone. For Europe, it's sitting at the moment now. The previous figure was 1%. The forecast is to have that drop to 0.75%. Only a 0.25 drop, but they're looking to see to help with the building process through Eurozone to drop that interest rate. Okay, and then the most important one this afternoon for the US session or market is going to be the unemployment claims, as well as the ADP non-farm employment change. Okay, they're expecting a lower figure than the previous. Previous is 133k or 133,000. Expecting a forecast of 103,000. Okay, this is leading up till non-farm employment data. It comes out on the first Friday of every month, and tomorrow it happens to be that Friday. So lots of news today, guys, so expect a lot of volatility or expect a lot of movement or speculative trading today. Looking at our charts, what is the chart telling us? Well, we look at the weekly and you can see that Euro for this week has dropped a lot of it has dropped since a reattempt of those prior swings or prior support and resistance level. A major one being that 1265 mark pair. So you can see quite clearly here prior support and resistance at the 1265. You can see 1, 2, 3, 4. This is our 5th consecutive week finding resistance at this level. So on our daily, I'm going to be marking these all in 1265. You can see the past couple of days price moving away from that area tentatively, not with a lot of momentum, but moving slightly lower as it's done previously, just recently. A lot of support and resistance through there, and as long as it's moving lower, we could potentially see price moving towards the 1250 mark. Daily back towards this area here, 1245, 1250, as we've seen price in this area, trading in this area just recently. You could also use the fib retracement areas from the highs here in May to the low in June. Start of June, you can see that the 23.6 is in play as we speak. And that coincides with a lot of consolidation in the past month or so. Get below that, and then you can see there's a bit more free air between 23.6 to those lows we saw at 12,300 back in June of this year. So CTC, very important. That's a template that Serene Education teaches its students. is very much telling us that the overall sentiment for this pair is negative, and you can quite clearly see that swinging low. Low swings depicts downside movement. You can see from August, September last year, we pretty much have a very much a negative trend in play, and the major trend is in fact looking very negative. We have, however, had a small upside trend for the intermediate time frame, but that upside trend has come to the underside, or trading at the underside of the prior major support and resistance. We had a major break of that recently, and prices failed to actually get back up above those levels. And as long as it's doing so, then ultimately the sentiment is negative, and the CTC is telling exactly that sentiment is negative. All the moving averages are above price in order, which tells us that the sentiment also is negative on this time frame. So as it stands now, price is trading into a price support and resistance level, quite a consolidation range, and that's going to pretty much tie in with today's announcements. We have a lot of news announcements today, and you're going to find a lot of speculative trading today. So intraday, you're going to see a lot of whipping, a lot of up and down, yes, no, yes, no, yes, no, and that's going to take place at this price support and resistance, or this fib retracement area here at the 23.6. We do need to see a confirmation signal. We have seen 2 or 3 consecutive days of resistance of negative movement after a clear resistance or reattempt of this 1265, and as long as price is trading below that, or below this area at 1265, then ultimately intraday we should be looking for that sentiment to continue to the downside. So for our chart in hourly, we want to see opportunities or setups on these time frames to gain from that, to capitalize from that situation. You can see quite clearly that sentiment or the movement is very much negative to the downside. However, we've had a little consolidation here, so you could potentially use that, but ultimately we know that the area in play at the moment now is going to be that 23.6. If I just drop my February retracements from the high here at the start of May to the low that we saw here at the start of June, you can see prices move back against these 23 at the 38 and just short of the 50, but you can see it's been trading between the 38 and the 23 just recently. Okay, and you see a lot of indecision candles now, or hammer. There's clearly a hammer here. Price finding some sort of support at this level. It's consolidating. You can quickly see over a number of days consolidation at this area here at 1250. What's that? 1252 in change. You also notice that all the moving averages are pretty much close together, which is telling us that sentiment on our intraday is looking quite indecisive. Hence the reason why we've gone sideways for the last 20 odd hours. But we've gone sideways at the underside of the institution moving average on our 4-hour chart. It's imperative that we, if we see further negative sentiment, then we should be trading below it, and sure enough it is. And if it was to be trading positive, then it'll be trading above that. But you can see quite clearly we are trading below a major resistance level, which is the 1265, our daily and a weekly support and resistance. We are pulling back to the downside, and most important, our CTC is looking negative across the board, and that coincides with the moving averages being above price, acting as a ceiling. Okay, projection, you can see these highs here to this consolidation here at the bottom to the high over here, for example, 100% would take us roughly around the 1249, but ultimately 161.8 would take us back to these areas down the bottom here at 1241 intraday. So at the moment now, if price can get below that 1252, the nice bearish engulfing, then we should be tackling that 124200 intraday. Next up is sterling. Let's have a look at cable and see what's been happening on the weekly. Here again, like its European counterpart, also finding a bit of resistance at the given area at the moment. That you can clearly see on, this is the 4th consecutive week that we've had some sort of resistance around the 15700, 15700 mark, which coincides with the institution moving average, major moving average being the 200 period moving average here, and that's the green line. And you can see price falling through May right through to the beginning of June, and then bouncing higher. Price failing to actually break above that 50% retracement area, primarily because we were now in direct influence with the institution moving average on the weekly. Price needs to be trading above that in order to see further extensions to the upside. And until such time as price is doing that, then we should be seeing consolidation with an outlook for further sentiment to be negative, and a reattempt of those lows to that major support and resistance level here at 15,300. So I'll just mark that in. Okay, so on our daily, we want to see that movement pulling higher. Okay, you can quite clearly see that, and you can see the failure to break above the institution moving average, which coincides with this 15,700 mark. Noticeable support here, resistance, yet to get just recently a number of indecision candles, spinning tops, and dojis after a bullish up candle which failed to close higher than 15,700, which coincides with the institution moving average as well as the 50. So a lot of resistance above price, and most importantly, our CTC on either side is very much red. There's no blue above it, so it's telling us that the sentiment is genuinely negative. And as long as we're trading below this 1575 as well as the institution, then ultimately we should be looking for shorting opportunities. And yesterday we had a nice bearish break after an indecision candle, and this being a decisive candle. So as long as it maintains to the downside, we could be targeting this 1550 to start with. But let's have a look and use our fib retracement areas as potential target areas. So we drag it from the top here at the start of May. Let me just see if I can get this right on here. There we go. To the low here, or the start of June, and then you can see prices pulled back noticeably. And in doing so, tackling 23.6, then the 38, then the 50, and then back towards these areas to the downside. Nice little bounce in 23.6 just recently on the Friday. They moved higher. Spent a bit of time above the 38, which coincided, failed to actually move any higher because of that institution, as well as the 50% retracement. 2 days of indecision. We wanted a decisive candle, whether it would be up or down, and we got it yesterday, which is negative. So another resistance level, confirmed like its prior one, at this 15,700, which coincides with its major support and resistance level. So as it stands now, price could very well move back towards the 23.6, which take us back to this 1550 mark, which happens to be price support and resistance at this level. Get below that, and you can see there's a lot more movement, or a lot more air towards that 15,300 mark, which we know on our daily and weekly time frames is that major support and resistance. As long as price, or the CTC, is negative on either side, then we should be looking for nothing more than shorting opportunities. So intraday, look for price to give you a nice juicy entry between 38.2 and the 23.6. So between 1550 and the 1565. Okay. Our 4-hour chart is confirming that price has been spending a bit more time above the institution moving average, where before, through this whole negative fall through May through to the early part of June, seeing fully fall below the institution moving average, which was very negative, and the CTC confirmed that. Now we've seen price actually attempting and trading above the institution moving average for the second time this in the past month or so. You can see price is trading at that institution moving average. You've had 1, 2, 3 indecisive candles, a doji and 2 spinning tops at this institution moving average area here at 1558 on our 4-hour, but it's trading at that institution moving average. Okay, prior resistance, new support, prior resistance. Okay, so what we do need to see now, if prices to move higher, is to maintain above the institution moving average. We do need to see a bullish candle of some sort, but notice the CTC is negative. But the one thing that's missing from here is the fact that the institution moving average is below price. We've got to get it below that, and then we can tackle the 15,500 mark. Okay, so it's imperative that we do see a break, and that break will give us that confirmation. If this is to be still negative, it'll take us below the institution, so it'll be because we don't trade indecision, guys. See, these are indecisive candles. We trade decision. As an indecision candle, decisive candle. Okay, indecision candle, decisive candle. We don't trade small ranges with lots of wick. Got to trade ranges with a lot of momentum, because the momentum will take you to the upside or downside. It will drive the market. So as it stands now, indecision at a major support, which coincides with the institution moving average. Get below that. If this is to be genuinely negative, because you can see everything on our 4-hour time frame setting is negative, it's got to get below this last protocol, which is this institution moving average here. So get below that, and then we should see a price falling to that 15,500 mark. If not, we get a bullish engulfing here. We should see price reverting to the upside and testing these areas at 1567, and then ultimately back up towards those areas at 1579. On to the US dollar Swiss franc. Let's have a look at the weekly. Price has been playing tic-tac-toe with a price support and resistance level that coming in the shape of the 9,600 mark. Apologies, guys. There we go. Just to make sure I can put this in so you guys can see it. There we go. Prior hesitation at this level on a longer term time frame, weekly, You can see price got above this just recently, but failed to actually materialize from that. It failed to kick on to the upside towards that parity level, or the institution at 1,000, which also coincided with a major price support and resistance level on this chart. You can see way back here, September, October, November, December, through August, September, October of last year, but that November, December of 2010. So a major support and resistance level, and price pretty much moving lower, but trying its hardest or its damnedest to actually stay to the underside, because it still feels that there's a bit more to come from this. But as long as it maintains below the 960, the ultimate outlook would potentially be for price just to fall away. So it'll be interesting to see what happens in the next couple of days, as we have non-farm payroll tomorrow. We also have the ADP non-farm employment change results today for the US markets. Okay, so you can quite clearly see the lows here in May to the high. So we can take this low and project it to the high we saw here just before the start of June. 23.6 coincides smack bang with the price support and resistance level. Since then we have the 38.2, the 50, the 61.8, and ultimately the last one that isn't really projected that lot is the 78.6, which coincides with the institution moving average down here, and also further resistance and support in the past at 920. As I mentioned many times over, if price is failing to break a support and resistance level and spends more time below that level, then there's ultimately going to be more negativity. If, however, it breaks a major support and resistance level and it finds support above that level, then ultimately, or price spends more time above that level, then ultimately price is going to move higher. You can quite clearly see in this stage, through June in particular, price spending more time or trading a lot more at the underside of 960, so it's in fact quite bearish. Notice the CTC, however, it's bullish, because the institution moving average and 50% line are still trading below price, supporting her. However, sentiment on our intraday time frames is looking negative, because we're still trading below that institution moving average. If I show you the 4 hour, for example, you can see that price 960, there we go. You can see price is spending more time below this level, okay, this major support and resistance level. Let's just put that in for you, and in doing so, price is starting to waver. You can see that the high and the prior high attempt, not as high as that one over there, and moving lower. Notice that price is now trading above all the moving averages, but smack bang at the underside of this major support and resistance, 960 on our 4 hours. So we've had 1, 2, 3, 4, 5 consecutive 30 hours of trading at the underside of this particular major support and resistance level. And notice the candlesticks. The past, what's that? The past 12 hours, or if you want to, 16 hours. Very indecisive. Okay, very indecisive. Spinning top, spinning top, spinning top, and we've got another spinning top right now on a 4 hour in play at the underside of a major resistance level. Okay, notice CTC still telling us it's bullish, and the institution moving average and the 50 and the 20 are all below price, acting as support. So on intermediate time frames, intraday looking positive upside, however capped by this major support and resistance level. If this is to be genuinely still positive, it needs to break that 960 with a nice bullish engulfing candle, and then find support, and then we'll tackle those highs to the upside. Until then, it's bullish. It's consolidative at the moment now, and we don't trade this because we're looking for a confirmation signal. Price might very well, after today's news, find resistance here and pull away quite sharply with a nice bearish engulfing, and that would tell us for the foreseeable future we should be targeting lows for the time being. Ultimately down here to 12.45, sorry, the 945 mark would be a great target to the downside if price failed yet again at this 960 mark. Last pair of the day is US dollar Japanese yen. Let's have a look at the weekly. Still very indecisive. We started the week very indecisive, and it's still very much indecisive. And that indecisiveness is occurring or taking place at the underside of a major support and resistance level, noticeably being the 80 mark. Now 80, very, very strong support and resistance in the past. Attempt to break out recently of that area after some favorable non-farm payroll figures in in February of this year. Saw price rallying to the upside and breaking a major support and resistance level here at 80, and rallying towards a major support and resistance level to the upside. Our first target on our daily to the upside. So only long-term traders would have been looking at 8,400 as a major target area before we saw price reverting to the downside. And in doing so, we would expect to see price actually forging out a nice support after a breakout and then heading back up towards 84 and then ultimately back up to all these areas at 86, etc. That failed to materialize as price broke lower, an indecision. Then we got decisiveness and price edged down towards the 78.6. Okay, so there we go, the 61.8. If I put in the 78.6, there we go. On a weekly, so I started June, finding support at 78.6, and then heading higher and trading at the underside of the 80 mark. So on a weekly, notice the CTC template in particular still very negative. There's only one or two areas where we've had blue, and even then that sentiment is coming against the overall major downside trend, so you wouldn't be looking for any buying opportunities if and when those signals arose. And it's only just recently the price has actually broken this downside trend after a lot of consolidation for a number of months, 8 or 9 months. You can see quite clearly here as we moved further out on a weekly, you can see price support and resistance here at 84, price support and resistance at 80, and price support and resistance at the 76 mark. So you can see noticeable areas of consolidation. Okay, or October, November of 2010 right through until now. A lot of whippiness. You can see here large parts of 8 months, another 8 months or so trading in a consolidated range. It's only recently this year in February we've had some sort of movement, genuine movement. However, we've seen it being capped and prices reverted. So hard right edge, that's where we're making our money. You can see on our daily, if I do and put all these lines in on our daily, you can quite clearly see that price has spent a majority of its time just recently trading at the underside of a major support and resistance level in the shape of the 80 price support and resistance, a major one. Okay, there we go. You can see it. Hesitation, a full week of hesitation at the underside. Look at this, a lot of hesitation previously. We had a failed attempt to break higher. We're looking for price to find support now because it was all above all the moving averages. But you'll notice that our CTC on the top side of this, on the other side, noticed that there wasn't genuine sentiment in this, and the sentiment still gave us a negative outlook, even though we had positive breakouts here above the 80. It knew very well that sentiment wasn't genuine sentiment, and sure enough, we had a bearish engulfing candle which took us back below this area here of support and resistance, and now we're just consolidating at the underside. 1, 2, 3, 4, 5, 6, 7. A full week of indecision. Look at this. Very small trading range with wicks on the other side, spinning tops, small bodies, all coming at the underside of a major support and resistance level. And as long as that 80 or the major support and resistance level is above price, then ultimately we should be looking for shorting opportunities. Okay, intraday we should be looking for shorts to the downside. Notice we are getting swing higher since June. So we've had a breakout, a pullback, and this pullback has taken us to the underside, and we've had swing highs forming because of that. However, it is starting to squeeze now between this intermediate trend and the major support and resistance level. Something's got to give something's got to give shortly, and we could see that pretty much coming in the form or the shape of the non-farm payroll figures that are coming out tomorrow or this afternoon. We have the ADP employment change figures, so it could be very, very interesting. Do we get a bullish engulfing here to take price higher than 80 to see further extensions to the upside for the foreseeable future, or do we get a bearish engulfing because you've seen a lot of resistance at the underside of this 80 to see price reverting to the downside, and in doing so tackling those other support and resistance levels to the downside? So the lows here in February to the high in March, you can see that price, if we did get a bearish engulfing, could or would tackle those areas of previous support and resistance here at the 79 mark, and below that would be our 78.6 February tracement area, which coincides with a price support that we had in start of June down here at the 77.70 mark, which coincides with previous support and resistance. Okay, but you'll see the institution moving average still below price on our daily, so that could very well keep price at the underside or reattempting these highs. Got to get below that as soon as possible, and in doing so, a break below the 79 would generally confirm that we should be looking for shorting opportunities for the foreseeable future, with an outlook at 78.6 being our first major target before the lows here at 76 below as our long-term target, target 2. So as it stands at the moment now, all your intraday stuff Let's have a look at the institution moving average. You can see price is trading well above that for the time being, and as long as it does that, then we should be looking for positive sentiment. However, you can see it's starting to be capped now. It's been squeezed from these lows in June. Swing high, swing high, swing high, swing high. Hold on a moment. It's looking very, very ominous now. You can see this candle here, in the exhaustion candle at the resistance level. Okay, long wick to the upside, faking people into the trade, and then moving lower because it's just finding resistance above, and it'll move particularly potentially back down towards this trend line, intraday trend line here at roughly the 79.70 mark or 79.80 before we see a potential consolidation. Still above the institution, and you can see the CTC is selling us up. A lot of indecisiveness recently. Look at this, very indecisiveness, and all this indecisiveness actually gives us the pictures on our daily as spinning tops. Okay, so get below. It's got to be trading below the institution moving average to see any further extensions to the downside, and then we can target those devils. So 79 would be a potential target, excuse me, to the downside if we broke the institution moving average, and below that would be that 77.70 mark, which is way down here. So there's a lot of movement to the downside once we break 79 and the institution moving average. So on our hourly entry candle, you can see quite clearly a failed attempt on the Asian session this morning, fake out, bearish engulfing. This is almost like a tweezer top, railway tracks we call them. Noticeable 80 here at support and resistance. Price moving higher this morning in the Asian session, but failing to actually move higher and find support and then move higher. It's actually engulfed and taken price back below it, forming this candlestick pattern here called a tweezer top or railway tracks, and then moving lower. In doing so, it looks quite ominous that we could be looking back towards those lows again. However, just be well aware that we have seen swing highs, and we could see price actually reverting towards the 79.60 mark here, which coincides with the institution moving average. Price has been moving backwards and forwards between these two lines quite a lot recently. Still remains blue across the board here, but if this is to be genuine blue across the board or buying sentiment, we do need to see 80 being punched. And as long as this actually is there as a form of resistance, then this buying sentiment or buying signal we're getting now on our smaller time frames, the hourly, is not a genuine signal. Okay, so we should be looking for shorting opportunities to come from that. That's it, guys. Quite a long one today in terms of analysis, but it's important because we are going to see a lot of speculative trading today as well as tomorrow, because we're going into the first Friday of the new month. Non-farm payroll, big announcement. It's a big one that a lot of people watch. So it's good that we actually take aware or be aware of it going forward. So if you are not trading today, if you can't find any entries, suggest you stand aside, because you'll probably find there'll be a lot of speculative trading, which actually amounts to a lot of volatility on the market. Wait for price to actually make its move, and then we trade the movement. So count this as a long weekend, if you will, and come back on Monday with a clear, decisive direction for the foreseeable future. Okay, have a fantastic day. Keep it simple. Back it up with sound money management. Any trades that you do, and I'll see you first thing tomorrow morning. Until then, trade serene.